beyond what you're currently doing. And then finally, if you're just like, I've heard of IDU, but I'm just real not sure, what they do. Obviously, we'll cover that as well. So we're gonna really go through today and let you know what we're all about at IDU. We'll show you how we complement the domestic market. We don't compete against it; we complement it. We'll talk about our individual DI solutions. Obviously, that's a majority of what we write. But we'll also talk about some of our business solutions. So our key person and also our buy sell. So again, I think if you're in the DI market, you're going to find this beneficial. And I think you'll find some place where you can use IDU in the future. So if you're not familiar with IDU, we are a Lloyd's cover holder. And what that means is that we work with companies that operate in the Lloyd's of London marketplace. We have agreements in place where we can market their product. Obviously, Lloyd's of London does a lot of different stuff. Our specialty is the disability insurance, and obviously that's what we're going to talk about today. In terms of one of our biggest differentiators, I think it really is our people that operate this company. Ryan on the sales side, but also our underwriters that work in this market as well. And I always tell people that, a lot of times, and I don't want to pick on the domestic carriers too much, but a lot of times the domestic carriers are looking at how they can get out of a policy, right? And I think that really one of the differentiators in the Lloyd's market and IDU specifically is that we're always looking at how we can make an offer, and not only an offer, but a real competitive offer. So that's kind of what I see as a differentiator. From a product overview, and I know Ryan, we're going to talk in more detail about the specific products, but can you just kind of give the audience a highlight of what we
Yeah.
broad spectrum of what we all can offer on the IDU side?
Yeah, well, I could probably talk for the next 30 minutes about this, but as Seth mentioned, we are going to be highlighting the personal income IDI, key person and buy sell. But keep in mind, we have a whole host of other business products, loan indemnification, BOE. We also have more specialty risk products that are death benefit associated, especially for business contractual needs. And then we also have our FSL side of our company that does a domestic 2H67 product that's specially designed for a lot of these impaired cases. So you're going to find a wide range of products that we're able to offer, whether that be in the domestic marketplace, that's specialty, or in the Lloyd's marketplace. So by no means is this going to be any form of an exhaustive list in the presentation of the things that we can offer. And maybe you don't know what might work best for your client, you can come to us and ask, hey, I have this business client. These are some of the concerns that we're having. What kind of offerings can you provide? And we're going to be able to walk you through all the different avenues of various products and solutions that we might be able to provide that would fit with your client's needs. So again, we're going to be talking about, 3 specific products, but keep in mind that there's going to be applications across the board for any of these target markets that we're going to be discussing today.
Yep, absolutely. And so, Ryan, I mentioned this earlier. We don't really compete in the domestic marketplace. We complement it. And so, what I always tell agents is that if you can't get the coverage you're looking for with that domestic carrier, check with us, right? Because we might have a solution. And so, why don't you walk us through kind of how we complement the domestic marketplace so people can get an idea of where they might use us or the advantages of using IDU.
Yeah, absolutely. So again, we don't compete with the domestic market, we enhance what's already there, whether that means an excess type of a need where their benefit limits are just not meeting the client's needs, regardless of if that's in a personal income protection due to their income level. They're being declined for a medical impairment or an occupational need, a business product need that either, again, the limits aren't going to meet, or the profile of that client isn't going to be considered by the domestic space, that's where we are going to come in and enhance that domestic opportunity, right? So we talked about those issue limits. Also, another area is the size of a business. A lot of times there's restrictions on the type of business or the size of business, the size of a client's net worth that are going to trigger the domestic market to not have an appetite for that type of risk. That is not where we fall. We are happy to take on all sizes of businesses, all spectrums of incomes, and we can really enhance those type of offerings. So if you're running up against some barriers from a domestic standpoint on a buy sell or some IDI, come to us because we are going to be able to find a solution and provide some options where you might have previously thought there were none. Medical impairments, we're not going to be highlighting a lot of impaired or medical impairments, but it is really important to keep in mind that the client base that we are still targeting and talking about today might have medical history, and there might not be a very strong, suitable solution in the domestic space where they're declining or postponing, and we're going to be able to come in and instead of doing that, look to rate, rider, or exclude. And we have a ton of flexible underwriting mechanisms going back to Seth's early point about our underwriting expertise. This is a foundation of our company. So we are very creative in that maybe off the bat, we're talking about an exclusion, but there is oftentimes ability for us to be creative. And instead of excluding for a medical condition, maybe that means we limit the plan design slightly or we add a rate load. And we are very open to having discussions on various different options for a client based around some of these risks that would otherwise be a very black and white treatment in the domestic marketplace. And then again, occupations, we are going to be highlighting, medical, white collar business owner, really a higher earning income clients in this webinar today. But by no means are we limited in that space. We very much do a lot of blue collar, a lot of really funky occupations. I'll see something new every day. So whether that be social media, entertainers, actors, athletes, you name it, it's probably something that we can consider. And then lastly, again, participation. Domestic markets here on the limits will cap out on how much benefit they're willing to provide when you're dealing with high income earners. So someone making $1 million, $30,000, $40,000 is not all that much of a replacement ratio when they now lose their income and have to figure out how to pay their bills on a day-to-day basis. We're going to be able to, as we highlight in our next slides, make sure even these high income earners are getting at least up to a 60-65% income replacement there. So very meaningful for individuals whose lifestyles meet their income level.
So regarding occupations, Ryan, quick question. So I celebrated my grandson's 6th birthday this past weekend, and he told me he's a real life Ghostbuster. And then other times he'll say he was on his iPad, and I was like, "Hey, why don't you put that iPad down and enjoy the party?" And he said, "Grandpa, don't you know I'm trying to become a YouTuber?" So Ghostbuster, probably not
Yeah, actually, you'd be
occupation.
surprised, Seth.
You'd be surprised.
There's some of those, TV celebrity Ghostbusters. I'm
Yeah.
blanking on the name right now. Hey, well, we would consider it.
Awesome.
Generally speaking, if you're doing it for fun, there's not going to be much need. There's no financial loss. But if he does
Yep.
become a successful Ghostbuster, tell him to come talk to us.
All right, sounds good. Sounds good. So first, we're going to take a look at personal income coverage, and Ryan mentioned participation limits on the previous slide, and that's where we do see a lot of this individual DI being sold, kind of on top of that. And the recent Milliman individual DI report came out, and all the who's who in disability insurance and domestic carriers participate in it, and it listed that the highest limit for a company will issue is 35,000. The mean was 20K. And so, do the math on that. And that's, kind of where you're going to get in the domestic. And then from a participation limit, 35 was the highest participation limit in the survey. I'm just reading you the stats from the Millman survey. And the mean was 30 million. So, or excuse me, not million, 30,000. And so, that's a lot of monthly benefit, but there's a lot of people that make money where they need, coverage on top of that. So, Ryan, why don't you give us some highlights on
Yeah.
the personal income coverage?
Yeah, so first and foremost, you can see we have some big numbers on some of our top bullet points here. We can look up to 250,000. In fact, there are specialty cases. These are going to be sort of your one in thousand, where I've seen 300, 400, and $500,000 benefit per month being offered. The 250 is the most common. That's going to be where you kind of see the most caps. But again, with aggregates up to 50 million and higher. So we see a ton of super successful attorney clients, for example, or physician clients who are making millions of dollars in their practice. Again, that 30,000, 35, even if they're able to get up to 40, is going to be a drop in the bucket when you look at a financial loss. And now, how are they paying for their houses, their cars, their lifestyle, right? And so, again, this is meaningful coverage where we're able to offer that 250K, regardless of how much domestic is offering, as long as we're not exceeding our replacement ratio caps, which can go up to 75% of income. And that's going to depend on the taxability and some of the underlying covers and factors there. Additionally, here, we go up to age 69. This is another big shortfall on sort of the domestic side, where a lot of these clients, when they're getting into their 60s, especially when we're talking about these business owners, these white collar professionals, my grandpa's an attorney and he's in his mid 80s. He's still working as an attorney. So they basically work until they drop dead. So there's a lot of limitations in the domestic space where we can either fill in or take over completely from dollar one. So we have been talking about a lot of excess here, but we've seen plenty of opportunities, plenty of client requests where they need meaningful coverage. They make a lot of money. They are really A-type hard workers, but they're just not able to be considered by the domestic market. And maybe that's due to an age or a medical condition. And so it's really important to keep in mind that there are valuable solutions out there. All Lloyd's policies, if you're not familiar, come with a maximum of a 5 years, what they call less one day policy term. This does need to go through a renewal process, so they are essentially being re-underwritten after that 5-year term, but we're making that process as seamless and streamlined for you as possible. So we're reaching out ahead of time, making sure we give you, usually it's just a short form app, very easy. And then we're having the next policy go into effect right as the other one's, expiring. So there's no lapse in coverage there. And then we do have benefit periods up to 10 years, especially in regards to this sort of clientele that we're highlighting today. Oftentimes you'll see 5 years as a good benchmark. And then I like the benefit structures that we're able to offer, because this is super different than the domestic market. And I think it's because it is so different, often underlooked from a Lloyd's point and a sales point for the IDI, which is that, of course, we're offering monthly benefits, but we also offer lump sum benefits and a combination of monthly and lump sum benefits. And what that would kind of look like is a monthly benefit that gets that client to that ideal 60, 65, maybe even 75% replacement ratio. And that pays out for 5 years while they're totally disabled. And at the end of the 5 years, they're not going to be recovering and returning to work. And again, these are own occupation definition, so their specific specialty. They're not going to be, the chance of recovering, I don't want to say they're not going to be, but of course, the chance of recovery we know is a super long shot. So what do they do now? And that's where that lump sum on the combo paying out after the monthly benefits have been exhausted is really powerful, because the monthly benefits are really used for, again, your day-to-day life, your monthly bills, keeping your lifestyle afloat, where the lump sum can then kick in and be used as however that client sees fit, whether that's medical debt consolidation, whether that's a new business venture. Maybe they want to go back to school and do something different. It's a huge substantial sum that they can then collect on the back end that's going to be able to meet bigger and broader needs than just their monthly, and day-to-day sort of bills. So I think that's a really powerful sales opportunity there, and a unique plan design that probably isn't talked about and sold enough. So I really wanted to spend some time and highlight that. And then we, of course, have some additional riders here, the residual and COLA, those are really broadly available. And I would say we quote them on 99% of our cases there. One of the big things that we also like to highlight here is I know that probably plenty of us have been doing this for long enough that we know one of the bigger barriers to a sale in the DI space is some of the underwriting requirements and medical exams, labs. I have to go get my blood drawn and da 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 da. Especially as we're all post-pandemic now, we know how little everyone wants to do all of the pokes and needles and prods. So we don't do any of that. We do all of our medical underwriting, and we're going to highlight this on all of our products. All of our medical underwriting is done via APS records. So we're not having that client have to schedule, go out of their way, take time from their busy schedule. And we're talking about clients that are probably difficult to track down on a good day and then go get them to see a doctor. A little bit of possibly a nightmare scenario, especially, those high earning physicians. They say physicians make the worst patients, right? Well, we don't have to worry about that because we will be pulling APS records on their behalf. And it actually is even more emphasized here because when we're dealing with healthy clients, a clean application, there's a lot of scenarios every day where I'm talking to underwriters where they're waiving the APS records altogether. And all we're looking at is the application and the financials. So really streamlined as far as ease for the client, not having to jump through those hoops. And I think that's definitely powerful when you're coming up with some of those sales objections in the DI space. So one of the things here that I was talking about with the sales process and ease of underwriting, right? So when you're dealing with a client and you're working on their IDI coverage, it is a much easier sales process to already go ahead and look at the excess in conjunction with that. Instead of course, there's plenty of opportunities to revisit your clients who you might now have an aha, oh, they make a lot of money. I know that we're capped out at 30,000. Let me go have a discussion with them. That is obviously a great exercise to do for your book of business. But I think one of the easiest ways to seamlessly make this sales process move forwards is when you're working with that high income earner or that client you already know is underserved by the limits in the domestic space, is to go ahead and preemptively seek some excess options. And then you're presenting them with these dual kind of offers at the same time. They're already ready to go through application. They're already interested in having this conversation. So it is a much easier place to start. And the Top Up program highlights that even more. Because we have identified the fact that the domestic carriers are more restrictive and they do a very thorough underwriting job. We have identified the opportunity to piggyback on the work that they've done by taking a copy of that domestic IDI policy, seeing that they have been, issued this coverage, whether they be benchmarked at a preferred or wherever they're landing. We know that they're satisfying a lot of those requirements in the domestic space. So then we're able to just do a short form application, get some current financials, and then again, waiving that medical underwriting because they've already gone through that hoop. So we don't need to make them jump through it again, as long as it's been within 6 months of that domestic IDI policy being issued, and as long as they're under age 60. And so this is actually available to all market segments. This is not specific to white collar medical business owners. We do make this available to any of your clientele that are getting an IDI policy and might qualify for more coverage. So it is a really easy way to continue that sales process and maximize your commissions. So it's something to keep in mind, especially knowing that they don't have to go through more medical underwriting to get more coverage in the DI space. And before I move off of the IDI here, I think it's important to note some trends from a lot of other Lloyd's cover holders where we highlighted the over age 60 in the domestic space. But it's also worth mentioning that a lot of other Lloyd's cover holders have dialed back on this client segment, especially in the medical professional space, where we actually see a lot of other cover holders not writing any medical professionals or any medical professionals over age 60 if they are. We are very happy to issue coverage for these individuals. Obviously, each risk profile is going to be handled specific to that, but is an area that we're seeing a lot of opportunity of growth for us and a lot of dial back in restrictions from other Lloyd's cover holders specifically. Another area that we're seeing trends from alternative Lloyd's cover holders is plan designs that might look and feel good, but when you look under the hood, it's actually less serving. And something I've seen come up is a to age 65 benefit period. And, that can feel good because it works well with how a lot of agents think about the standard domestic carriers doing age 65. But a lot of these clients are, in their 50s, mid to late 50s, so on and so forth. And when you're looking at a to age 65 benefit period on a Lloyd's policy, what that means is that benefit aggregate and that benefit period is shrinking as they get older. So they're actually less protected than our standard plan designs, where we might quote just 120 months, or that combo that's 5 years followed by a lump sum that is not shrinking or reducing with their age. So it's kind of a little bit of a tricky pitfall that I've noticed a trend around. And I wanted to highlight that a to age 65 shrinking coverage versus on the Lloyd side. And this is what, again, makes some of the Lloyd stuff so unique and different than a domestic carrier, where you're going to actually be able to get more meaningful coverage by not reducing that benefit period based on a client's age.
Okay. One comment, Ryan, that I have about the underwriting, on your previous slide, it sounds easy, like the underwriting, even, and then you throw out this top-up program in addition. I'm like, wow, right? Like how fast we turn around.
Yeah.
It's like we see them come in and then they're approved and out the door. So it's
yeah,
a great program.
That's a great note too, Seth, because even when you're dealing with a more standard, fully underwritten and not the top up, the top up, if we get all of these things in really quick, that client could get coverage issued within like a couple of days, right? Because the approval process is so simple. Most of the time, the thing that's going to hold up any kind of underwriting is the medical records, the doctor's office being hard to reach. And so even in those scenarios, the majority of all of our policies are issued within 30 days or less. Of course, obviously things being out of underwriter's control where they can't make the doctor's office give it to us. But assuming we get those items in place, again, the majority of all our policies are issued within 30 days. So again, when you're comparing that to a domestic underwriting process on the DI side, it is light speed. So here's a quick case study for you all. This is an attorney obviously making a very substantial good amount of money. And here you can see the highlights on the domestic coverage where she has the group LTD, and that's going to be up to 10,000. And the IDI that they've secured, which is the 15,000, well, that's only about 30% income replacement. So what does she do for the remaining 35% that she needs? Most agents would just leave it there and walk away. There's so much opportunity that's being missed to get those clients to a really substantial 65%. And it's impactful when you ask one of these clients, what would you do if tomorrow you had to live on 30% of your income, right? As opposed to 65% of your income. That is a huge impact in your day-to-day life. So it's a really meaningful question and examination to walk that client through to help them understand the importance of getting that income covered. And a lot of these clients, especially the type that we're talking about, have gone through an extensive amount of schooling. They have taken on a extensive amount of maybe student debt, and they have worked really hard in their careers to get where they are. If a total disability came and took them out of being able to do that job, what do they do now? And a lot of them don't spend the time thinking about this. So it is a really good exercise to walk them through. So here again, we were able to fill in that excess gap on top of the domestic coverage with 40,000 a month, 120-month benefit period, with the riders, and all in that was about $1,200, $1,300 a month for this individual to purchase a total of $4.8 million of coverage. So again, those numbers actually make a lot of sense when you're talking to these clients. They are savvy clients, and asking these questions is really impactful to getting them to notice how much importance some excess coverage is. Okay.
Right. Well, key person coverage. In the insurance industry, when most people hear about key person insurance, their mind immediately goes to life insurance. And a lot of agents are really missing the opportunity about not talking to their business clients about purchasing, key person disability insurance. And so, this coverage is really for the rainmakers of the company. And usually, you know who it is, right? I think I saw a meme somewhere, or maybe it's a real life statistic. I don't know, but it's like 20% of the people are responsible for 80% of the revenue in
Mhm.
most businesses. And so, what happens if that individual becomes disabled and he's your number one sales guy out there, bringing in new sales, and now he's disabled for a year or 2 years or whatever the case might be, right? Your
Mhm.
business is going to suffer. So, the proceeds can be used to replace operating costs, replace lost revenue, how the business sees fit. So, Ryan, why don't you talk us through kind of some of the highlights on our key person
Yeah.
coverage?
Well, so the key person coverage, it's probably one of my favorite products. I sound like such an insurance nerd saying that. I realize
Hey,
that,
I was thinking that, but I was keeping my mouth closed.
but because of the flexibility of this product, so where you're talking about other business product solutions, they're going to be targeted to specific business needs, right? Buy, sell, loan indemnification. The key person coverage can, as Seth had said, be used however the business sees fit. So once the benefit is paid to that company, hell, they could take everyone on a cruise for all we care. Again, it's whatever they need, wherever that loss is seen. And so, again, those rainmakers, those individuals who drive a lot of important opportunities and revenue growth for that company. And we also see this a lot with startup businesses where the individual is really the brain of the whole operation. And maybe they're not making a ton of money right now, but the growth and the potential is something you need to protect, because if something happens at those early stages, now that huge opportunity has crumbled before it even got to blossom. Right. So there is actually a lot of key person opportunities, especially when you're selling life. You should always be talking to the client about disability. If you're not aware, disability is more common in your working years than death is. So it is something more important to protect against. And we do these coverages layering on top of domestic carriers. We also do these at $1 because there is, I think, a lack of desire to talk to clients about key person DI because there's such a perception that there's so limited offerings from a domestic carrier, where that shouldn't be your thought process, because there is so much opportunity here in the Lloyd's marketplace with limits that are very, very high. And whether that be on top of a domestic option or starting from $1, we can go up to 10 times income, up to $50 million or higher. And again, with those issue ages, We also design these coverages either as a monthly benefit payout structure, a lump sum benefit payout structure, or a combo. I would say most commonly these are sold as a lump sum because it is more of a catastrophic permanent loss of that key person. You're not expecting them to return, so you're just getting one big lump sum payout. But again, going back to that startup or maybe that business owner, where they're really concerned about some expenses that are going to be coming due in a more immediate sense. So maybe they do want some more temporary monthly coverage that's going to stopgap them while they're trying to recover and trying to get back to work. And then if they don't, there's also the combo option that does the monthly, protecting them from more immediate, severe business expense type stuff. And then covers them on the back end if they're not able to come back to that business and stopgap a lot of those, recruitment, new hire expense type needs on the back end that are larger and more lump sum appropriate. Another area that I wanted to highlight here is cross-selling. So we're talking about a lot of these products, you're dealing with a client that needs more personal income or a client that needs a buy sell, but there's also so much opportunity in these business segments to do cross-selling. So when you're dealing with a business owner or an executive type, or maybe a physician who owns his own practice, and you're looking at their personal income needs, that is the perfect time to take a pause and talk to them about what happens to your business if you go out, right? We're protecting your livelihood, but what about the thing you've built, right? What about your business? What's going to happen to that? These are important questions to start asking because there's a lot of opportunity to not only sell some IDI, some excess personal income coverage, but also solve for their business needs that they might not be thinking about in that moment. So cross-selling is a very powerful sales tool when you're working with these type of clients. I would also like to highlight before we move on from this slide that we have some of the highest limits as far as the 10 times income goes across any other cover holder. And time again, when I'm working with producers, they're saying, IDU, you guys have the most aggressive, best pricing and the highest benefit limits available specifically for key person, but again, a lot of times across the board. And again, we love key person coverage. This is super palatable from an underwriting standpoint because the individual is not incentivized to go out on disability, where you might look at that from a personal income standpoint because the business is getting the benefit. So that takes away some of the anti-selection concerns that an underwriter might have. And this is why we've actually designed multiple different underwriting programs. So there's 3 avenues that might be available. There is the standard fully underwritten, which we've already highlighted is super easy on the medical side, regardless. And then we also developed a streamlined key person underwriting program, which I'm going to detail on the next slide. And then the third is our guaranteed standard issue GSI product. So we're not going into multi-life products in any detail here, more than mentioning them, but I think it's also a really powerful sales tool, especially when you're dealing with a business or an opportunity where, hey, maybe there's not one key person, maybe there's 3. Now we're able to offer a GSI, which is going to use a census enrollment and employer application with just a few questions verifying everyone's at work, all the census data is correct. And then we're going straight to issuance. So you're not even having individuals complete applications for a GSI type of a plan. It is the easiest way to implement coverage, especially pooling the risk with multiple insured. So again, we're going to talk about buy sell. You're dealing with multiple business owners. You might be dealing with multiple key person opportunities. That's such a powerful moment to look at the GSI because they're not even having to jump through any hoops to get that coverage placed. So it is definitely impactful and something to keep in mind. Also going down to the 3 lives is something you're really not going to find across any other Lloyd's cover holder. Now, I will add the caveat that, of course, these offers are based on the group profile. So medical professionals, for example, we probably wouldn't go down to 3 lives. We'd raise that minimum. But it is important to note we do consider GSI on physician groups, especially in the business product realm, because this is going to be a mandatory enrollment where they're all getting the coverage. So it's not a voluntary anti-selection type of a deal. And your medical professionals, again, you have a lot of business owners who are medical professionals, and they often have multiple people owning that practice together. That's where you can get them all coverage, super easy. It's basically a no-brainer and super easy to talk to them about. So I teased the streamlined underwriting program. We actually quote this quite often. And part of our consultative approach is you might come to us thinking you want one thing. We're going to quote that for you. But we also want to be able to quote multiple different options, especially if we see an opportunity. So oftentimes I'll get a key person request and hey, bonus, they qualify for the streamlined underwriting program. And so this is going to be similar to the top up in that it's a short form application, a financial questionnaire, no medical underwriting besides those questions in the short format, as long as, of course, nothing is coming up, they're not telling us they have cancer right now, or, that's a bit of a hyperbolic example, but it is streamlining that process. So it is so easy. We issue these policies typically within 72 hours or less of receiving that financial questionnaire and that short form application. And so this is going to be available to all white collar professionals. And this is on an individual single life basis. So this is not part of that group. You have multiple lives. You just have one key person opportunity here. As long as they're age 55 or younger, white collar, we can do up to 10 times income for up to $5 million lump sum. So that can be quite substantial for this coverage, especially with knowing that pretty much no medical underwriting, short form application, straight to the races. They get that policy within the week. Again, a super powerful sales tool to combat some of those objections you might have run into around the DI underwriting and the perception that it is difficult to get through. Finally, we have a little key person case study here. This is going to be part of that combo I wanted to highlight. Again, he was the VP of sales, super responsible for generating the majority of the revenue. So they were concerned that 40% of their revenue could be taken away if this individual was all of a sudden not able to be working on, at the company, even if it was short term. So they would prefer a 90,000 monthly benefit, and that's after 180 days. And then if that client wasn't able to come back to work, they knew that they would have a $1.59 million benefit on the back end to deal with any kind of recruitment, new hire expenses. Maybe they had to pay a severance package, so to speak. So this really answered all of their concerns by designing it in the unique combo structure. Okay, we're on to buy sell.
All right. Well, buy sell. Now I'm going to be the DI nerd a little bit here, Ryan. Buy sell is one of my favorite coverages. And the reason for that is I truly believe that your buy sell disability insurance is one of the greatest wedges that an insurance professional can use to get in front of the business owner, right? And, it boils down to in just a simple question that you can ask a business owner is your buy sell clause in your buy sell agreement, is it insurance funded or is it asset funded, right? Simple question. Is your disability clause in your buy sell insurance funded or asset funded? And like the only responses that they can have is saying, well, I don't think we have a DI clause. And so it's just an easy way to open up the conversation and get in the door, because again, insurance agent, and this is a general comment because obviously the people we work with do a really good job, but there's a lot of insurance agents out there that do the life insurance and then move on, right? They don't even talk about the disability insurance. And so there's a couple other questions that we use there. What if the financial plan, if one of the owners suddenly becomes disabled, or does the company have the resources to buy out the disabled owner, and are they can you liquidate them, right? Like they might have the assets, but you can't sell half a building, right? So it's like where are you going to get it? And and will the remaining owners have to take on a large amount of debt to fund their buyout, and can they get the loan? And so, those are some great questions. But someone told me a long time ago, that simple question just is your DI clause insurance funded or asset funded, and it's
Mhm.
a easy way to open up a conversation about disability buy sell. So, um, Ryan, you want to hit on the highlights here, and we'll wrap
Absolutely,
this up.
absolutely. And, so this is an area that we also see a ton of market opportunities because this is probably a little bit more readily available from a domestic carrier standpoint. And we are often layering on top of domestic coverage to meet the full buyout need. Because typically speaking, you're going to cap out around a couple $1 million here. And if you're dealing with a larger organization, that's just not going to meet 100% of their buyout needs. So we oftentimes layer on top, but plenty of times start from $1. And so, we've crossed out that market opportunity number one, but a huge area that we actually quote a ton of is your family owned businesses, because this is just totally unpalatable to the domestic carriers. They don't even want to consider family owned businesses. But I mean, it's brave enough to get into business with family, but then having to negotiate through contractual financial losses, who's taking on what. That is where having that kind of buyout agreement, knowing what happens when you have a disability happen, is going to be super powerful. And I'm sure it would make Thanksgivings and Christmases a lot more happy. So family owned businesses, we often starting from $1, and there are so many out there where, whether they're father, son, husband, wife, protecting their business, they still have a financial loss, even though, they're family members. Someone's going to have to foot that bill. So like, whether it's the company going to go under now, or are they going to have to take on a lot of debt? And these are things that a lot of these businesses have been around for a long time and take a lot of pride in what they do. And it's valuable to protect their business and what they've built together, and they want to pass on a legacy. So this is a huge area where it's so underserved in the domestic market. And there's probably a lot of agents out there that don't even think this is possible to get done, where we are doing it day in and day out. Obviously, the medical and occupational decline. So you might have a plumber business or a blue collar business that might not have a lot of options out there. That doesn't mean they have none. They have some with us. So it's important to keep that mind and that radar open, because we're not just always talking about the white collar, the executives, right? And then ownership percentages is another huge one. We'll consider 1% up to 100% business ownership, where a lot of times once an owner is more than a 50%, they're not going to have any options from the domestic space. We fill in all of those gaps, and there's a ton of them out there. So when you come across those kind of scenarios, don't walk away from that opportunity. You're going to have you're going to have the capability of being the hero and saying, hey, I have a solution for you here. And then on that ownership percentage is the one-way buyout. We actually run across this quite frequently, where an individual might be 100% owner, but they do have a buy-sell agreement in place, whether that be with an outside source or their employees who are going to purchase it. There's a ton of opportunity there, because again, we're going to be going from $1 to protect that buyout agreement. And I want to highlight here on the financial underwriting and the ease and flexibility of our process. We often see where agents are talking to business owners, and they're already doing this examination of their contract and protecting it from a DI space. And maybe they haven't finalized what that contract looks like. So they're shopping for insurance solutions ahead of time to see what kind of options are going to work best, and then kind of design the buy sell agreement around that insurance solution. And so we're able to place these coverages without that buy sell agreement being actually inked in pen, as long as it's signed, usually within about a year. We ask, there's going to be a stipulation to revisit and confirm that that has all been signed and completed, and there is a legal binding contract in place. But it's part of that creativity and flexibility on the underwriting side that you're not going to find from domestic carriers who are just a lot more rigid, a lot more in the box. Again, I talked about that GSI, huge opportunity there. You often find multiple owners in a practice, and being able to pitch them this kind of coverage where they don't all have to even complete an application is going to, again, make that sales discussion that much more powerful and yield that many more better results. And also you're upping the premium, upping your commission amount by being able to capture, 3, 5, whatever, 10 owners at once, right? And I know we're coming up against time here. This is just a quick little case study highlight where we have a situation where there was 2 owners. One was able to get domestic coverage, but they were limited to 2 million, where it's actually a $20 million company. The other owner wasn't able to get any coverage at all because of his age. So he was about 60 plus, and we did $1 for him. And then we did 8 million for the other owner, securing that coverage that made sure they were protected for the full 10 million of their 50% ownership on that business. So again, we see this time and time again, where you're dealing with some DI buyout and you're running into an issue on 1 or 2 of the owners. Again, we can kick in there, whether that one of the owners is getting 100% of their need filled and we're just dealing with the other 1 or 2, or that other one needs excess DI needs. There's a ton of options there, and we see those kind of cases time in and time again, especially in dealing with the older ages and medical concerns. Excellent.
All
Well,
right.
thank
Well,
you guys so
Ryan,
much
that
for your
that was
time.
great. Why don't you
Yeah.
jump to skip the remaining case studies, but jump to the very last slide so that if anyone has any questions or uh, ideally they thought of someone that they'd like to run a quote. But that's the best place to go to get a quote. Quotes at iduinc.com. You can also give me a call or a call as well. We'll send out all the attendees our contact information as well. I know this was a lot of information, right? So, Ryan, hit me 2 things that you want the audience to remember from today's presentation. And like I said, we got flyers on all this that we can send you so that you have it as well. But 2 things, high level,
Yeah.
2 bullet points. What hit me with
So
them?
high level here, very easy, is you don't have to know the exact solution. You don't have to have the perfect encapsulation of what you're going to do to offer that individual different DI solutions for their various needs. We're here to be that resource for you. And so while we're reticently, we readily available to quote whatever you're asking for, we also happily throw in multiple different options and provide a consultative approach in these sales discussions, and are happy to get creative with you on the underwriting side to make things more flexible, to get these cases through, and designing of those specialty underwriting programs that are going to make these placements even easier for you, get more DI sales business in the door, and implement really powerful coverages without having the headache that a lot of times the DI space tends to have associated with it. So keep us in mind. We are here to help you with your clients.
Well said. Excellent job. Thank you, everyone, for joining today's call. As I mentioned, we'll follow up with our contact information and the flyers that we discussed today, and hopefully we can write some business. Thanks, everyone.
Thanks, everyone. Have a good one.